What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's traded in the US stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you are alerted to when we release new videos, and subscribing to the channel really helps the channel grow, and the likes do as well. So we appreciate those who continue to do that as well. Now the nightly and weekend videos, like tonight's video, we mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to swings or long-term leaps. So if you want a deeper dive into exactly how we set up our charts, broadening formations, levels of support and resistance, things of that nature, make sure you check out that bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. So I encourage you to watch the full video. We do go over triggers and targets, but for all time frames. So we do give some pretty good insight. So let's go ahead and look at today's agenda. We'll go ahead and recap the price action from Tuesday, February 17th. Then we'll zoom out like we always do, take a look at the week, month, quarter, and year price action. And then we'll zoom back in to set the 4-hour markers and the triggers and targets for Wednesday, February 18th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. Just a quick note, today's video will be a little bit quicker today. Got some things, have had a very busy day, and it continues to be busy. So didn't really look at the charts too much today, but do want to catch up and make sure I am, up to speed with what the market did. And yeah, I've got something I've got to jump to here pretty soon, so I won't be dragging this out too much with my jibber jabber, right? So anyways, let's go ahead and look at the charts. Start here like we always do on the 5-minute. This is how we take advantage of our proven and repeatable strategy to get into early morning scalps or early entries into day trades, or longer than, somewhere in between a scalp and a day trade. But yeah, the method is quite simple, right? We look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. So with that, you can use a little bit of nuance. You don't need to be exactly at the opening print or above it. If you're just slightly below it when you get your higher low, maybe you want to go ahead and enter there. Now, just keep in mind that does bring in a little bit of added risk, right? Because you are technically still below that opening print level, so it doesn't technically totally fall into our trading method. But there are times where you do have to use that nuance to get that perfect entry. Otherwise, you might get a little bit later of an entry. Now, if things work out like they're supposed to work out, it shouldn't be that big of a deal. If you have less contracts or more contracts, it's just a percent, right? But that's how you can kind of get that perfect entry if you use that little bit of nuance. But otherwise, just wait for that price action above opening print to get into calls, or below opening print to get into puts, right? Lower highs and higher lows. Keep that in mind. Now today, looks like it was a little bit more difficult. Again, I didn't trade anything today, so wasn't really at the charts. But yeah, it looks like we got this opening print here at 6202. Got a little bit of a push up, got to the 61.8 fib of the drop from the peak of January 2025, and pushed back down. Looks like it fell back below opening print and actually below overnight low. So let's look where this high is in relation to Friday's last high, and yeah, that was a lower high. So this is where you can use a little bit of nuance. Yes, the price is above opening print, so technically you wouldn't necessarily be looking for that to get into puts in that early morning time frame. But if you take this high here in comparison to the previous high, it is a lower high, so you could have went ahead and entered here once this this candle went below the low of the previous candle, locking this in as a lower high, and you would have got pushed down. Of course, the first target to the downside is always overnight low or previous low a day. Those two levels are basically the same here, about 40 cents difference. So, you could have unloaded half of them at previous low a day, and unloaded, maybe another half of that half. So a quarter of that total position, initial position that is, at the overnight low, and let some runners run. You see we did push down all the way to last month's or it's not last month's, to this month's opening print, and got a bounce almost to the cent off of there, right? So did get that bounce there. We pushed back up, got the rejection of overnight low. Technically, you could have entered into more puts once this candle broke below the candle the 2-up candle previous to it, locking that in as a lower high. But you can see it got turned around pretty quick, so you would have wanted to exit as soon as this candle, this 2-up, went above the high of that 2 down, right? So would have had a small loss there. But again, if you stay true to the rules, then you end up with small losses, not big losses, and the wins end up usually being bigger. So it all pays off in the end. And again, you don't want to be entering into calls where you've got like a 1-to-1 risk to reward, right? You want to be looking for, yes, this may be the start of a push to the downside, but once you get to this previous low a day, what does that kick off on the 4-hour time frame? What does that kick off on the 1-day time frame? Does it do anything to the 1-week time frame? Are we going 2 down, locking in the previous week as a lower high? Those types of things. But that's how you could kind of play it in there early this morning. Now, we did push up, got the lower high, but then we got the higher low, ended up going higher high, and then higher low just below overnight low. So you could have went and taken a call right at overnight low, higher low, higher low, higher high, higher low, looking for that higher high, and that's exactly what happened, right? We pushed up through opening print pretty quickly. You may have been able to, on the 1 minute, find something in here, a higher low. That was your entry there to get in, and you see we pushed all the way up to opening print, which basically coincided with last week's 50%. And again, we talk about the previous week's 50% every week. How we deal with that level is usually a pretty good tell on what's going to happen for the rest of the week, or at least a very good tell for the following day, right? So you can see it was basically resistance all day. Did try and poke above it for a little bit, but ended up falling back below. So do we need a gap up to get us above that level and then continue to push to the higher range of last week's price action, or do we get some type of rejection here and push down and test last week's price, last week's low? Last week's low isn't too far down below here. It's basically at the month flip, and if we do go 2 down on the week, that does lock last weekend as a lower high. So we do want to watch out for that. So from a 5-minute perspective, scalping, early day entry. Early scalp, early entry into day trades. You had some opportunity there. Wasn't the biggest day in like one direction, but you did get a nice push down, and then you could have got it back to the upside as well. Now, once we hit that upside, it did go pretty flat, and technically we did close below Friday's low. So, it's a funny thing. Let's zoom out a little bit more here. Let's go to the 4-hour. Get a cleaner chart here. And let's get this here. Make this bigger for everybody. So on the 4-hour, we still technically haven't made a higher high, even in relation to the soft lower high that we had here with this 3 candle, right? Again, most of the time we don't really count those 3s as a concrete higher low or lower high, but if that is at least the first target you want to shoot for. But you can see we're still below that a little bit, and coming from a lower low, so technically still in the downtrend on the 4-hour. Let's actually get a little bit cleaner chart. That's what we want. There we go. So you can see there, still haven't made that. We're looking at still a downtrend in the 4-hour, and really technically just in this range, right? We've been in here for a couple of weeks, right? From 50, 54-ish, all the way up to 71, 70-ish, 69-ish. That's the range, right? So we're still in the middle, more towards the upper part of the range. So it wouldn't surprise me if we get more upside action tomorrow, and then the $70 to $72 level, acting as resistance and getting a turn back down, and maybe we go test the bottom of the range by the end of the week again. But we'll see here. Let's pull back up Yeah, there we go. So we can have the week's 50% level. But yeah, we want to see how we're going to react to that. Are we going to get up over that tomorrow and get some type of higher low to continue that push up, break that downtrend? Possibly. Let's look on the day chart, right? And this is what I was saying, is it's kind of funny because on the day chart, there we go. Let's make that bigger. There we go. Today's candle was green, but we technically closed below the previous day's close, and it was still a 2 down. So failed 2 down on Friday, failed 2 down today. Do we get this 3 combo 2 down 2 up, since we didn't get 3 2 down 2 up with that failed 2 down on Friday? Quite possibly. We'll have to see. Right now, an after hours price is down 1%, just slightly over 1%. So as of right now, doesn't look like that's going to happen, but we got a long time until the market opens on Wednesday, and we'll see where things line up then, right? So that's what we're looking at from the day chart. Let's look at the week. So I was just talking about that lower high. Let's make this bigger here. All right, and we can see on the week we've got this uptrend with high, higher low, higher high, higher low. Haven't made the higher high yet. So we do, if you are a bull, you do want to see that higher high to lock in that or continue this uptrend. And we got very close today to flipping this into a 2 down on the week already, and starting to turn this into a downtrend. Now technically we wouldn't have a downtrend until we made a lower low, but there are the right things in line to get us there, right? We've got a gap here at 55, we've got a gap here at 48, 2 very small gaps, but gaps nonetheless. And then we've got the gap down here at 45. So that would definitely give us a lower low, even if we didn't fill this gap at 45 and just maybe retest that 46.79 level. That was such a big resistance level in 2025. 2025. Sorry, that was last year. I almost got my years mixed up. Even if we bounce off of that level and not actually fill that gap, that still gives us a lower low. So on the week, we do want to be conscious of what's going on. It was a green candle last week, but it was an inverted hammer. And so we want to make sure that we're not going to get that 2 down. If we do get the 2 down, again, can't panic too quickly. We could just be having sideways price action, especially if we make a higher low, then we've got consolidation, really. So don't panic if we do get that 2 down. Don't go sell your whole portfolio, right? And maybe take a more defensive posture, maybe sell some calls, maybe buy some puts. Not 1 week, 2 weeks out, but give yourself some time on them so that we can see if we do go 2 down, where does that low develop? Is it going to be a higher low or lower low? Now, if we break that low here and make a lower low, okay, maybe now you sell some things. But at least on the way down, you've hedged against that, and you've hopefully made some profit. So that's what we got from the week chart. Just want to try and continue to get that higher high to continue the uptrend, or if we do get that 2 down, don't freak out. Let's see where everything lines up as far as where the low is. Let's go ahead and switch out to the month chart here, and we can see, again, not much else to say. We had the higher low here, made the higher high. It's still an inside candle, not so much up here in the upper third of last month's price action, but still in the upper half, easily in the upper half, approaching the upper third. So again, even if we go 2 down on the week, nothing to panic about in the higher time frames. We will start to get a little bit more worried if we do start filling these gaps to the downside, and as we approach that 46.79, because what's this, 4508. If we get below 4508, then that triggers a 1 2 up 2 down, and that magnitude takes us all the way down here to that $28 level. So again, nothing to freak out about from the higher time frames. The month is the only thing that really has something that can trigger. The quarter, we already ran the 1 combo 2 down, combo 2 up to magnitude 70.08, so not much to see there. And on the year, we did the same with the 2 down. Oh, come on. There we go. With the whoa, thank you. with the 2 down, 2 up this year, right? So we had the 2 down last year, and then in January this year we went 2 up. Magnitude of that is 70.08. It reached magnitude there as well. So again, higher time frames, not much to worry about. On the day and lower time frames, just play that volatility, right? There's not much else to say about it. We've got triggers and targets for both sides, especially on the shorter, even 5 minute, 15 minute, 1 hour, 4 hour time frames. We've got our entries as as far as higher lows above opening print, lower highs below opening print. Oops. And things of that nature. Yeah, we just want to be ready to play both sides of the equation. Oh, that's not what chart I want. Is this what I want? There we go. Sorry about that. There we go. So let's start talking about, actually, let's go to the 5 minute. Because we'll just talk real quickly about the proven and repeatable strategy, right? So we've got, just to set it up for tomorrow, we've got previous high day up to the top of the screen, previous low day at the bottom of the screen, overnight low and overnight high as they sit right now. So those could change overnight or in the morning. So the only thing that we have left as far as the 4 hour indicators or 4 hour markers, right, is the opening print. 4 hour markers are previous high a day, overnight high, overnight low, previous low a day, and opening print. So let's say we get an open somewhere just in the middle of the range, right? Then we want to look, if price opens and we push up, maybe get rejection off overnight high, but pull back down and get some type of higher low. You want to enter calls, right? First target being overnight high, coinciding with last week's 50% level. Second target being previous high a day, right? So higher lows at or above opening print, targeting overnight high than previous high day. If we open and we push down, maybe bounce off of overnight low and push back up, but then get a lower high at or below opening print, you want to get into puts, targeting overnight low and then previous low a day, right? So obviously a little bit more magnitude to the downside, but either way you play it, that's what we look for. Higher lows at or above opening print, look to get into calls. Lower highs at or below opening print, look to get into puts, all right? And oops. So that's what we've got from the shorter term time frame. Let's look at the 4 hour chart to get us a better idea as to what we want to do for maybe more of a day trade or even overnight swing, right? We can see that again we're in that range we've been in for a couple of weeks, towards the getting in that upper third. If we do press to the upside, we're pressing into that upper third, and you probably want to target the upper end of the range. If we do go to the upside, that will kick off this 1-2 down combo 2 up. Not much left to go with that, magnitude being 66.25 right here. Again, the magnitude of a 1-2 down 2 up is the candle to the left of the 1. If you're not familiar with the STRAT, there is a free PDF in the description of this video. It's a quick reference guide, basically. Give you everything you need to understand the STRAT very quickly. It's not a hard strategy to understand. It's very simple. That's the way it's made to be, but it breaks down price action very well. So anyway, back to what we were talking about here, right? That would trigger that 1-2 down combo 2 up magnitude there. Now there is kind of a sloppy 3-2 down combo 2 up that could be seen here, but I'm not gonna, that's a little bit too sloppy for me. I played kind of some sloppy strats before, but that's a little bit more sloppy than I'd like to see. But to the downside, again, we have not made that higher high in comparison to the soft high, lower high that we had on Friday. And so no higher high means that if we do go 2 down tomorrow with a 2 up, 2 down, we are continuing the downtrend, and the magnitude for that move, obviously entry at the low of the 2 up and the magnitude being the low of the 2 down. Again, we start threatening a 2 down on the week at that point as well. All right. So that's what we've got from the 4 hour. Let's take a look at the day. Oh man, come on, Thinkorswim. Play nice. Goodness me. On the day, we can see that we do have a chance for a 3 combo 2 down, 2 up if we go to the upside. It would first be a 2 down, 2 up, triggering at the high of this 2 down, magnitude being the high of this 2 down. But again, ultimately, if we get there, not a lot of magnitude, so it should get there pretty easily. If we do get above that price level, then that triggers that 3 combo 2 down 2 up, magnitude being the high up here, high of last week 70.86, which is the high of Thursday of last week. All right, to the downside, this would just be a continuation of this combo 2 up, combo 2 down reversal, triggering at the low of Monday's price action, and then the low over here was this 55.67 down here, just right above the gap, would be the magnitude of that move. Would not be surprised if we poke into and close that gap. It's a pretty small gap, but if we do that, that triggers a 1 combo 2 up 2 down, which will take you down to the low of the candle to the left of the 1. So that takes us down here to 44.33. All right, brings us back into the previous quarter's price action, actually, right? This is last quarter's high here at 50.76. So do look at that, even if we poke below it, as a probable bounce point, right? This is the range that we've been trading in here. So even if we do poke below it, watch for that snapback action that could take you back up to the $70, $71, $72 level. All right, let's go to the notes here so we can look at the hard numbers, right? We've looked at the charts quite a bit here, even though it has been a quick video so far. So for Wednesday, February 18th, there will be 220 trading days left in 2026. The close on Tuesday, February 17th was 63.50, and the opening print for the week was 62.02, meaning that if price goes below 62.02, that flips the week red. Takes a little bit more to flip the month red, 59.51, and then the quarter and the year flip red at 45.13. But for now, it is full time frame continuity to the upside. The week, month, quarter, and year are all green. We see here the expected move for the week is plus or minus $8.96 from the close on Friday, giving us an expected range of 73.55 to 55.63. If you're not familiar with the expected move, make sure you check out our weekend video where we dive a little bit deeper into that for you. No gaps above right now, but we do want to keep note of where our gaps are below. That's why we've got these here in our notes. And we know that from a scalping perspective or an early entry into a day trade perspective, we're looking for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. Right? We talked about on the 4-hour time frame, if we go to the downside, that gives us a 2 up, 2 down, triggering at 64.09. There is a possible bounce point at 62.02, just because this is pretty good magnitude, 64 to 59.50, and we could be just moving sideways right now. So even if we do bounce to 62.02, doesn't necessarily mean we go make a higher high, but that is just a point of inflection in between these 2 points that are a decent distance apart, right? Now, if we do reach magnitude there and continue on down, we've got an extended target for you there at 58.53 on the 4-hour time chart. But to the upside, we would trigger a 1 2 down combo 2 up at 65.96. Again, not a lot of magnitude there. 66.25 is the magnitude for that move. And what that would do is kick off that kind of sloppy 3 2 down 2 up I was talking about. I didn't put it on there because it was so sloppy, but I did put the magnitude there. So on the way to it, we've got these extended targets here on the 4-hour time chart. Now on the day, if we go to the downside, that does trigger that combo 2 up, combo 2 down at 59.56, magnitude being 55.67. So decent size move for the day. If we do get past that, that does trigger the 1 combo 2 up, combo 2 down, and we do have the triggers to the downside with the ultimate magnitude. Oops, that should be magnitude of 49.33, right? Now to the upside, we would have a 2 down, 2 up, triggering at 65.96, magnitude being 66.25, which would then kick off that 3 combo 2 down, 2 up, with a couple of targets on the way up to the ultimate magnitude of 70.86. All right, we'll stay in the notes. Like I said, we looked at the charts quite a bit, and we know that on the week we're still inside, trying to protect against going 2 down, locking in last week as a lower high, but that would take going below 59.29, which we are not too far away from. So you know how SOXL can run. It is very possible that we trigger that tomorrow. If it does trigger that 2 up, 2 down, magnitude is 49.33, which would then trigger this 3 combo 2 up, combo 2 down, which has these extended targets with the ultimate magnitude of 42.01. Now, if we go to the upside, that gives us a 2 down combo, 2 up at 70.86 is where it triggers. 71.98 is the magnitude for that move, so not a lot of magnitude there, but it would kick things back off towards that all-time high of 74.21, and then we've got a couple extended targets out here for you as well if we really get to running. We talked about on the month, we have the opportunity for the 1, 2 up, 2 down if we get down below 45.08. If we do, there is a point of inflection there, a pretty good point of inflection at 35.70 before we would reach the ultimate magnitude of that move at 28.12. But if we continue to the upside, that just gives us this 2 up, 2 up continuation, triggering at 71.98, and we have our extended targets out here, including that all-time high at 74.21. We talked about on the quarter, we already ran the 1 combo 2 down, combo 2 up, reached magnitude at 70.08. So not a lot there, but we are still in force. And then on the year, we did trigger the 2 down, 2 up. Again, reached magnitude at 70.08, but we're still above the trigger. So we are still in force on that, right? So there you have it, your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Hope everybody enjoyed today's video. Try to jam in as much information as possible without taking up too much of your time. Thought it would be actually a little bit quicker than it was, but I did my rambling as normal, so it ended up being just slightly shorter than our normal videos. So hope I was able to jam in all the information that everybody needed. Again, I wasn't really at the charts today, so I couldn't give the best first-hand approach as to how price action happened today, but hopefully it was understandable for you all, and hopefully today's video was helpful. So we'll go ahead and end the video here today, like we normally do. If you're watching this Tuesday night, and if you're watching this Tuesday night, get some good rest tonight. All right, if you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night, and we look forward to getting out there and trading with you.